Hello and welcome. My name is Jeffrey Kennedy and welcome back to another episode of Elliott Wave Junctures. If you recall in yesterday's commentary, we were talking about the different Elliott wave patterns that there are. Now technically there are 13 distinct Elliott wave patterns. However, again, if you boil out or basically take away the variations, you're essentially left with 5 core patterns: impulse waves, ending diagonals, zigzags, flats, and triangles. Now, if we take those 5 patterns and break them down into their 2 respective categories, we have motive waves and corrective wave patterns. Yesterday, we looked at one type of motive wave, and that was the impulse wave, and that was in the dollar Swiss. Well, today I'm going to show you the second type of motive wave, and that is the ending diagonal. Okay, now in this price chart here, this is a stock, this is Union Pacific, this is a 180-minute price chart. Now again, with respect to an ending diagonal, its identification is actually very simple because it looks like, as Edwards and McGee would refer to it, it looks like a wedge. In this instance, this is a ending diagonal to the downside, so this would be a falling wedge. Let me pull up my price chart here and I'll show you how I actually identify the substructure here. We actually, off this high here, we have waves 1, 2, wave 3 ended here in a small truncation. Here's my 3-wave advance in wave 4, and again, notice how the guideline in this instance here of the depth of corrective waves, whenever you have a 5-wave move, you tend to see wave 4 retrace, or the correction retrace back to near the previous 4th wave extreme of 1 lesser degree, and that comes in right there again. So you see that guideline adhered to. Now the move to the downside here, this formation from the extreme of wave 4 to the extreme of wave 5 here, this is the ending diagonal. Now, ending diagonal is a 5-wave pattern wherein each wave subdivides into 3 smaller waves. More importantly, it has a very distinct shape. You see that your trend lines converge, and one of the reasons that happens is because wave 4 actually is expected to end in the price territory of wave 1. Now, with respect to a classic impulse wave, or the traditional impulse wave, in this instance, this move here, wave 4 can never end in the price territory of wave 1. However, with the ending diagonal, it's expected to. Now, there's another aspect of the ending diagonal pattern, or actually 2, I would like to remind you of. Now, number 1, ending diagonals, it is a terminating wave. It can only form in the 5th wave position of impulse waves, as it is here. This is the 5th wave position of the larger impulsive move to the downside, or the wave C position of an ABC structure, like for example a zigzag or a flat. Wave C can be an ending diagonal as well. So those are the only 2 times you can actually find an ending diagonal. Again, the 5th wave position of an impulse wave, or the wave C position of an ABC formation. Now, another aspect of the ending diagonal, which is not many people are very familiar with or know of, is it's a timing component. And now it's a guideline that my mentor Dave Allman had mentioned to me years ago, or taught me, that typically whenever an ending diagonal terminates, the resolution of the pattern occurs within 1/3 to 1/2 the time it takes the pattern to form. Okay, what does that really mean? Well, in this instance here, we have our pattern complete, or begins here to the downside. This is the ending diagonal. Okay, when I say the resolution of the pattern is whenever the pattern is complete, a sharp volatile move occurs back to beyond the origin of the pattern. So in other words, at this point here, I expect prices to retrace the whole length of the pattern, i.e. go back to above the extreme of wave 4 in this instance, in 1/3 to 1/2 the time it takes the pattern to form. Okay, that's very, very important information to know whenever you're dealing with, say, a time-sensitive investment, i.e. an option. Okay, let me show you what actually happened in this instance here. Again, this is Union Pacific, ticker symbol UNP. The actual ending diagonal began here and ended here. That's about 23 trading days. Well, the guideline is that we're going to see a full, complete retracement and then some of this pattern within 1/3 to 1/2 the time it takes the pattern to form. Well, 12 days later, that's when we actually exceed this extreme right here. We go back to beyond the origin of the ending diagonal in 12 days. I'm a day off here, but it's a good guideline. It's a solid guideline, and it's one I look for quite often. And also, too, I think in an instance where if you were trading options, in this instance, say call options, knowing that you'll be looking for a complete retracement or looking for prices to trade back above, say, the $95 mark or $95 a share within, say, 10 to 15 trading days, that's important information. That about does it for today, and I'll see you tomorrow.